Yeah. All right. Well, welcome back to the South Florida Mortgage Report. I just love that song, actually, Craig. I can't believe you did all that in your home studio. It's amazing.
Yeah, it's pretty wild.
Calculation, man. Right on. Welcome back to South Florida Mortgage Report. Billy May, your hat to wearing mortgage guy, on with Craig A. Garcia, president of Capital Partners Mortgage. We're in beautiful South Florida, but it's a little cold this morning, right, Craig?
Woke up and it was 40 degrees. So
I
yeah,
know. Yeah, I know.
not
Well, the rest of the
pretty
country is
cold for
like,
us.
yeah, I know it's cold for us, exactly.
Yeah.
But good stuff. We're going to talk about, as usual, we'll talk about interest rates, but we're going to talk about a great topic today, Craig, and credit. And it's too funny because you and I both had the same idea. Hey, let's talk about credit. Everybody's always wondering what their credit score is, or what we can do to improve, and how does it affect home financing. But I think it's a great topic to launch into. But before we do that, let's talk about mortgage rates. The Freddie Mac survey came out. Average rate, this is just above 6%. That's that average rate. And of course, there's all this news and stuff. And matter of fact, I saw some realtors sending out stuff because at one day, about a week and a half ago, I think Mortgage News Daily said, hey, it's at 5.99%. And everybody said, hey, it's below 6%. So interesting stuff on mortgage rates, though.
Yeah. I mean, we really like last week, the talk was, hey, rates kind of hit the lowest level that they've been at in 3 years. And that was amazing news. And, we did a little, the last episode was about predictions for this year and everything. And so, no sooner did we put that out there that over the weekend, Powell comes out and says he's got a formal investigation going against him. And
I know.
so, that was, but this time and nothing really, the market didn't really freak out about that. You know what I mean?
Yeah.
And apparently Trump came in, later on and said he really wasn't looking to fire Powell, reiterated that. And, and then this week we had an inflation report. CPI came out, and that was actually lower than expected.
Hmm.
So still good news. But every Fed guy that's out there, every time he's doing a speech or something like that, a lot of these guys, every chance they get, they say it's still above target. You know what I
Yeah.
mean? But we have seen more talk about that there is the risks are more towards the labor market than inflation, which is good and supportive for rates. We had a small employment report this week that actually came out stronger. So which is usually not as helpful for rates. All in all,
It's
not too much
stable.
change.
There's
Yeah, yeah,
stability in the marketplace. And I think, we looked at like 2025. A lot of us, we're saying, hey, there's been stability in the marketplace, and all these tariffs and stuff. It hasn't had this dramatic effect, either negative or positive, either way. And there's stability. The market likes stability. So, but the stability is good because it keeps helping our rates get lower, which is good. So if we can get down below that 6 on a permanent basis, boy, that'd be spectacular for rates.
that would be great. And that's kind of I mean we'll have to see how things go, but that's kind of the stability seems to be widely expected.
Yeah.
I'm sure it won't be without your occasional short term variations. We'll get
Right.
some kind of news that comes out and drives rates lower or something that drives rates higher. But overall, that's been the prediction for this year. And so this
Yeah.
week, kind of in that realm. So
Yeah. Yeah.
yeah.
Exactly. Well, to get those great rates, you have to have great credit. Depending on the program. So, I mean, if you want to do a conventional loan, you have to have great credit. I want to talk about credit I want to talk about a couple examples, Craig, and this is kind of just get information for people to know. So I'll give you an example. I have a client that I've been talking to over the past couple of months over the phone, and they want to do a refinance on an investment property. And they always say, oh, my credit's 720, credit 720. Well, they finally applied, and then we pull their triple merge credit report, and the middle score that I get is 651, 70 points different than a Credit Karma score. And we tell people all the time, Craig, I mean, the score you see in Credit Karma from these consumer sites, why is it different from the score we pull, Craig?
There are numerous different scoring models out there, and so every industry technically can have their own scoring model. And so, yeah, so if you go to buy a car one day and they pull your credit and they tell you what your score was for your purpose of buying a car, you could go the same day and talk to us we pull your credit and it could be wildly different.
Yeah.
And then Credit Karma could be different because
Yeah.
each one of those is a different scoring model. And
Yeah.
and that's it's kind of always been that way.
Yeah.
But obviously, back in the day, um, you didn't have this option of monitoring your own credit score. Not,
Yeah. Yeah.
not like you do now. There's even your credit card probably gives you the opportunity to monitor your score through them. So,
Yes.
which is good, and the transparency is good, and certainly the relative changes are very helpful. So, so even if your Credit Karma score isn't going to be what you pull on a mortgage. But hey, if you look at that on a regular basis and you can see your Credit Karma score has been improving, I'm sure your mortgage score has been improving too. It's just not going to
Yes.
be exactly the same,
No,
So,
and it's
yeah.
weird, but I've had people where I pulled it, and most of the time it is slightly lower than when we pull it. I've had some times it was drastically lower. I actually had one time it was higher on ours than it was on Credit Karma. Very rare, but there's a number of factors that influence your credit score, and remember there's three bureaus. And then, like you said, there's different grading systems within those three bureaus. So there's just so many variables. But one of the key factors for credit scoring, Craig, and we always talk about is outstanding balance on revolving credit or trade line. But there's a misnomer about that. Everyone thinks that, hey, I got a $10,000 balance on my credit card. I've never charged above $3,000. Therefore, my rate, my utilization is below 30%. I should have great credit. That's not necessarily true, right, Craig?
That's right. That's a very common misconception. You have like use your example, you got a limit of $10,000, you owe $3,000. So you owe 30% of your credit limit. And people go, that's a good number. And 30% is kind of a nice sweet spot, but it's not 30% of your limit. It's actually 30% of your what they call high credit balance, which is really the most that you've owed. So if you only owe 3,000 against your $10,000 limit, but 3,000 is the most that you've owed on that card ever,
Right.
you're at 100% of your high credit balance.
Yeah.
So it could be that, so from a computer's eyes, when it's running the score, it's looking at you thinking, hey, you owe the most that you've owed. And so even though you have all this extra limit available, and so it would be much better in that particular example if you owed $1,000, because now you're
Right.
at 30%, or around there. If you were 30% of the 3,000 or $900, I guess is what it would be. Now, if you owe 900 versus the 3,000 most that you've owed, that's probably the sweet spot that gets your score boosted quickly, um,
Yes.
which is something we can help with, right?
Absolutely. So, my client I spoke with earlier in this week, we pulled the credit. She was so distraught. I can't believe it. I see the score. I said, well, listen, there is a feature that Capital Partners, we here at Capital Partners, that we utilize and not all lenders do, especially if you go to a big institutional bank. I don't want to say any names, like that. But a lot of times you go to one of those places to get a mortgage, they pull your credit, you got a 651. Hey, sayonara, we can't help you out. We have access to a credit simulation model that we'll go in there and we'll go in here and we kind of do some research and we can put on there, okay, if you pull we look at the credit cards and we'll say, hey, here's a credit card here. If you pay this down X amount of dollars, how much will it improve your score? So this prospective client I spoke with, I said, listen, we've done the run the scenarios here. We can get you to a 709 credit score. We're talking, 58-point difference. You have to do these actions. You got to pay it on this credit card, you have to pay it on this credit card, et cetera, et cetera. And she has the ability to do that. Now, it is a little tedious to document that. But the point of the matter is, it can be done. And for her, it's going to be going from, hey, I can't even get a mortgage with this 651 score right now, back to, hey, if I get the 709 within 30 days of the time that we pulled that credit, if we can get there and rescore it, we can help her out. A lot of moving
Yeah,
parts
no.
there.
And it's interesting, but for some people, because all of the credit score changes a lot of times just based on percentages and not dollars. Sometimes people can make a pretty sizable impact to their credit score short term without a lot of dollars that they have
Oh,
to deal with.
absolutely. You got a credit
You
card with
know,
a $500 limit. I mean,
yes. Yeah. So that's definitely we've seen that too. So, yeah. So somebody who they only owe, $1,000 total of credit cards, but that thousand is the most that they've owed. for them to get the 30%, for example, it might take $700. You know what I mean? And that's
Right.
not a big number in the whole scheme of things. And I've seen people, over the years, we've seen people jump 60 points, and it doesn't take very much.
Right.
Others might be different. You know what I mean? It just
Sure.
depends on what their credit makeup is and everything.
Yeah.
Um,
Every
but to get,
situation is different, especially with
yeah,
credit. I mean, I don't know. I've seen, I can 25,000 different credit reports. Sometimes you scratch your head. How come they do have this 651 score? Yeah, there's many reasons. Sometimes there's no logic to it, but that is one thing we do. So we can rescore credit. Don't get distraught if you're someone out there and you're not looking to buy yet. It's the first of the year. Hey, I want to buy this year. I'm not sure my credit is. You got to talk to us because sometimes there's some simple things
for
that we can
sure.
do just to get you where you need to go.
Yep. And, a couple things, just in the credit world, in the credit realm, one of the things that I would say, if you happen to be listening to this and you're somebody who's, hey, I'm going to start talking to somebody, soon. This is my year. I want to buy, but you haven't done anything yet. One of the things we'd recommend that you do, and it's going to become less important after March, but right now it's still important, is when you do get your credit pulled to talk to somebody, you don't want to have that trigger a onslaught of solicitation calls to you.
Ah,
Um, and
good point.
so and so because there's this thing called trigger leads. So when you get your credit pulled for certain things, the bureaus look at that as an opportunity to make some money, and they will sell your information to a bunch of other companies that do the same thing to try to call you to get your business. And it can get really out of control sometimes. And
Yeah.
as we've seen it, especially for in our world. So in March, I think they're going to outlaw the practice of doing that, is when that kicks in. But in the meantime, you can go down, and I'll put the link in the description of the episode. It's optoutprescreen.com, and you can opt out. You can basically you fill out a form there, and you can basically, you're telling the bureaus, hey, not giving you permission to sell my information if I get my credit pulled to go shop for an auto loan or a mortgage or what have you. So that's definitely something I'd recommend people do,
Is that
because
how long does that take to take effect? Is it instantaneous? Is it like 24 hours? Is it a week? How long does it take?
I've heard 5, 7 days. You know what I mean?
Okay.
I don't think it's a definitive number that we know. But certainly, if you're on the front end of doing it, you have time. And then one other thing I would just comment about is, sometimes you hear about soft credit pulls, right? And that
Yes.
becomes a big factor that people are selling. Hey, it's not going to be a hard credit check. There's good and bad with that, right? And because usually any company that's doing a soft credit pull in our world is, they're not pulling three bureaus, right? But the lender at the end of the day wants your three bureaus. So if I'm promoting the fact that, hey, I don't have to do I'm going to do a soft credit pull on you, I can almost promise you that that lender is not pulling three bureaus. They're probably pulling two or maybe one. And so what happens is, now they're going to base their whole determination for you. And you might spend all this time trying to get ready to buy a house and make all these plans based off of this guidance that you've gotten off of this one, maybe two credit scores. And for most people, it doesn't end up coming back to bite them. But if that third bureau has some information on it that the other two bureaus don't have, some
Absolutely.
collection account, something that's on there, and it can happen. And now that one score can change the nature of the deal a little bit, and sometimes a lot. So, sometimes these transactions these days, with affordability challenges that are real and out there,
Right.
some deals come down to very little difference between getting what they want and not getting what they want. And so
Absolutely.
it can matter. And so that's why the better your score is, the better your chances of getting approved, the better terms you're going to get. So spending a little bit of time on your credit certainly is worthwhile, and keeping your credit good, is something that will reward you over and over and over again your whole life. It's super important. So
Absolutely. But if you're not at the 700, or let's say you're even at 600 score range, don't always think, hey, it's something I can do. Actually, believe it or not, you still may be able to get a loan. Let me give you an example.
Yeah.
I have a borrower just got approved yesterday. We spoke to the borrower back in November. I pulled their credit report, and they told me right up front, "Hey, my score is not where it needs to be, but I need to buy, et cetera, et cetera." I pulled it. The middle score was 603. I said, "Okay, you might be able to do an FHA loan for you." But one of the issues on his credit report, Craig, is he had a charge off from a credit card. He had a business a few years ago, and he put it on a revolving charge, like $19,000. And he went to one of these kind of consumer counseling places. They said, "Hey, we'll talk to the creditor on your behalf to negotiate for you." So he had stopped paying back in March. It was a charge off, and so all these lates were on his credit, drove his score down. And when I ran it through the software, I said, "Hey, if you come current with this creditor, we may be able to do a loan for you, but you have to not go into that consumer credit counseling, whatever the type thing it was." And it turns out he was negotiating with the credit consumer counseling, was paying them, I think, $300 or $400 a month. They had negotiated a deal, and they said, "Hey, if we negotiate a deal with your creditor over a 4-year period, he's gonna have to pay them like $13,000, $14,000, where the charge off itself was like $17,000. So I said, "You really should break that deal with that counseling service, call your creditor, get current." And he did. And he got current. It didn't take him a whole lot to get current. I think it was $1,400 or something. And we approved his loan yesterday. And he's getting an
Nice.
FHA, and he's locked at 6.5% with a 603 credit score. I
Yeah.
mean, you know,
Yeah, no, I mean, yeah, definitely. When we talk about credit, it's certainly important. There's definitely certain programs that you have a certain credit score to get. But then there are programs where the credit piece is much more flexible. FHA being one, where yeah, you've got a lot more flexibility, and you definitely don't have to be perfect. So yeah, no, so definitely don't think that you need to get perfect before you get
right.
into talking to people like us to see what you can do so that you can start the process of buying a house. You know what I mean? If
It
that's where
Yeah,
you're
it
at.
certainly helps the better credit, obviously, but
Okay.
don't despair. Talk to us, and we may be able to find a solution for you. And the rest of his credit profile actually was pretty good. It was this one credit line he had with a business, and it's unfortunately drew up his score down dramatically over time. So, hopefully his score is going to go up. But plus, once he closes and everything, he'll improve his score. But really interesting. There's so many different criteria with credit. I know you and I both, we want to talk about that today. What are some of the other things that someone can do or maybe not do, Craig, to maybe impact their credit score?
I would say one common myth is, okay, I need to get rid of some of these credit accounts that I have, and I want to close some of these
Oh,
accounts off. I'm going to pay off stuff and
huge,
close it.
huge.
So what people don't realize is one of the factors of your credit score is the average length of time that your accounts that you have now have been open. So what people are thinking, okay, it's going to look better if I don't have all this open credit available, and so I'm going to close all these accounts. Like
Uh,
for just to take an absurd example, you had 10 credit accounts, and 9 of them you had going back 20 years, and then the one with the best terms that you have, you just got it last year. And so now you have 9 that you've had for 20 years, you've one that you've had for a year. The average length of your credit is almost 20 years, right? But if
yeah.
you go and close all 9 of those ones that you've had forever, just keep the one new one,
Mm-hmm.
now the average length of time that your credit accounts have been open has been a year
Oh,
because all the other ones
destroys
are
your credit
closed.
score. Destroys your credit score. I've seen it.
I mean, it's contradictory to what people would think might happen.
Yeah.
So yeah, so usually what we would advise people is, hey, you want to pay it off, but don't close it. There's no reason to close it. You know what I mean? And then obviously there's going to be some personal reasons why you might want to do that. Every one of them charges an annual fee or
Yeah.
something. But if you can wait till after you're going through a big thing like buying a house, you know
Yeah.
what I mean,
Yeah.
and then close those accounts afterwards, that's probably what we'd recommend.
Yeah. Yeah.
Um,
But it definitely has impact on the score. I mean, a matter of fact, I got a credit card in the mail. I have a creditor. I took it out 10 years ago. I never used it, but every once a year they send me a letter. "Hey, you haven't used it. If you don't use it in 30 days, we're going to close it." And I go and use it. I go buy one or two things on it, and then I pay off the next month because I've had it for 10 years. It's clean. I don't want to close that account because I've seen it. where I had that happen years ago where I closed an account and I did see the impact of my score. It took a couple months, but it did impact my score. So you're right I mean, that history right there, it's great history. And if you close it, they don't rate it anymore. They don't grade it, the credit bureaus.
Yeah. A couple things for people who maybe don't have a lot of credit. Maybe some people who are newer to the workforce and borrowing and all that stuff. There's things little things you could do. I mean, if you don't have any credit, you could go open a secured credit card. I mean, you can go with as little as $300. You can go to the bank and say, "Hey, I want to open up an account to give you and put it in a savings account. I want you to give me a credit line for that amount." Banks would be happy to do that typically. And so, I definitely did that when I was in my youth. And a lot of times you can do that if you're, even if it's not that you're new, but you're trying to rebuild your credit. Maybe you had some errors that happened.
Right.
That's usually something that is a way to get you back into getting some good credit history established.
Yeah.
And then you use it and pay it off, and you show that you're paying that account good. And then I've seen some people that do something. I know Experian Boost is a service where you could pay a fee and get like your payment history for your utilities
Oh,
added to
that's
your
right.
credit
Yeah.
report.
You could
Um,
have, yeah, your cell phone,
and
utility. Yeah.
and then you can do the same thing with your rent. And and I'll put a link in the notes. Tenant Credit Boost is one of these services, and you can
That's a
go
great
there,
one.
and yeah, that's a pretty inexpensive service that will help you report your on time rent payments. And if you are trying to show like if you've had the last 2 years you've been renting from somebody, and you want to show all that and get that on your credit report, there you could spend a little bit of money, but it's a pretty reasonable fee to get
Yeah.
suddenly all this rental history now part of your credit profile, part of your credit score. That can be something that can help. Yeah, and so those are
Those are
some.
excellent ideas. Excellent ideas. I know the one that we used to say years ago is, hey, if a parent puts you on their credit card as an authorized user, it would improve your, you'll get your credit because it gives you instant credibility, so to speak. I think it still works, but when we go to rescore, sometimes I see or the software says to be removed from an authorized user account. So I don't know if they've caught on to the credit bureaus to maybe they're a little leery about that.
Well, I would say this. I mean, if I think a mix of these items is probably helpful. We've seen people where they've basically gotten all of their credit history established through authorized user accounts. And so what happens is, and then sometimes you can see a very nice, pretty credit score because it's really your parents' credit,
Yeah,
for example. And then, but a lender, if they're really looking at that person as a borrower, and all of the credit or the majority of the credit score and history is being derived from somebody else's credit, and you're just the
that's right.
authorized user, they can say we don't consider that a valid credit score.
Right.
Doesn't happen very often, but it can happen. And so, having your own credit, if you have on some authorized user credit on there, hey, that's not a bad thing
It's a
necessarily.
nice
So
overall profile, but I think that
yeah.
the two things that you really harped on is if you're renting, if you could get that rent on there, absolutely, or the secured credit cards or your utilities, cell phone, maybe even car insurance or internet or whatever. Those are excellent ideas to get build a strong credit profile if you're rebuilding or starting off if you're young.
Yeah, and there are some new, credit scoring situations that are happening. So there's this new Vantage score that's coming, which is supposed to take more housing payment history and things like that into account. That's being pushed by the by Bill Pulte, the FHFA, head, and but that's not been incorporated into the plumbing of the mortgage industry, not yet. So
Right.
it's
Not
something that's
yet.
getting worked on. We'll be talking about that when that's actually come to bear. So for now, they're anticipating it's going to provide some competition in the credit scoring space, which is probably a good thing. And then maybe some, open up some access for certain people, which is certainly good. But it's at this point, it's in the works. It's not ready for prime time quite yet.
Yeah.
So.
Yeah. Great information. So I know that it's a very encompassing topic, credit. So really, really good stuff. So, um, yeah, excellent. So, Let's go ahead and we'll go ahead and start wrapping up our show for today, Craig. And we got a big weekend. I got a 3-day weekend. It's going to culminate on Monday night, being down here in South Florida. South Florida were the epicenter of a lot of events over the course of years, but we had the college football championship actually happening Monday night here in Miami.
Get out your pots and pans. You've got the
Right.
Cuban quarterback against the Cuban coach in
Right.
Miami.
Yeah.
A lot of roasted pigs. It's going to be a
Yeah.
party.
It's gonna be fun to watch, and I
Yeah.
find myself pulling for Indiana actually. So even though I grew
Yeah.
up as a big University of Miami fan, growing up down here like you in South Florida in the '80s and '90s and so forth, but I just like a competitive game. But it should be fun to watch.
Yeah. I mean, it's shocking how Indiana has been waxing everybody.
Yeah,
So
it's
so
true.
I hope it's a good game. That would be a lot of fun. So
Yeah,
let's see.
absolutely. So, well, listen, you have yourself a great weekend. You stay warm, and
Yes, sir.
we'll see you at the
Closing
closing
table, sir.
table. We're going to jam out to
Yes,
some
sir.
Calculation Man on the outro of this week's episode of the South Florida Mortgage Report. Hit like, hit subscribe, and we'll see you next week.
Calculation man, he's got numbers in his pocket and a spreadsheet in his hand. Calculation man, solving all your problems with the formula so grand. Calculation man, he's got numbers in his pocket and a spreadsheet in his hand. Calculation man, solving all your problems with the formula so grand. Calculation man, he's got numbers in his pocket and a spreadsheet in his hand. Calculation man.
Sure.